With house building ramping up at last and new homes starting to trickle through, many are starting to dream of owning their own home once again. Times are tough still for first-time buyers due to rising prices, rents, and some of the tightest lending rules in Europe. But don't despair, with these tips, you may still be able to get a foot on the property ladder. By using a combination of grants, equity release from the family home, and also the right mortgage lender, that new home might be closer than you think. So first though, who qualifies as a first-time buyer? To qualify as a first-time buyer, you can't have had a mortgage under your name either in Ireland or overseas. The good news though is you still count as a first-time buyer if you previously inherited a house or bought outright before, and also you qualify if you have become divorced or been made bankrupt since your previous mortgage. Importantly, if there are two people going on the mortgage, both must never have had a mortgage to qualify as a first-time buyer. So how much can you borrow? The amount you can borrow is set by two things. First, the central bank lending limits, and secondly, the mortgage lender's credit policy. The Irish central bank's lending limits are some of the tightest in the world, so these are usually the biggest hurdle that needs to be overcome. For the vast majority of first-time buyers then, the maximum you'll be able to lend is 4 times your annual gross household income. In theory, you can get up to 4.5 times your gross salary with what's called an exception, but these are limited and usually are only given to higher earners. On top of the central bank limits, apply a second set of rules to assess that the lender applies to assess whether you can repay the mortgage. Generally, the lender looks at your earning and spending history in the last 6 months to work out how much income you have left over after you've covered your commitments. The more money they think you'll have left over, the more likely they are to lend to you and the more that they will give you. This makes maximising how much you put by in the 6 months before applying for a mortgage really, really important. So what deposit do you need? How much money do you need to actually get put down on a house? The minimum amount of deposit you need is also set by the Central Bank of Ireland. The good news is, as a first-time buyer, that is only 10% of the property's purchase price up front. That said, it does make sense to maximise your deposit as much as you can, so you're paying less in mortgage interest, and also you're maximising your potential bidding power. Ramping up the deposit reduces the mortgage size, which can knock thousands off the interest you pay, and it may allow you to afford a more expensive property. With spiraling rents eating into the savings you can make, this is where it can pay off to be a bit more creative in terms of boosting, which brings us to our tips for doing that. So how can you boost your deposit? The Help to Buy scheme allows first-time buyers to claim 10% of their property value to help them pay for a deposit on a newly built home. So if you're buying new, you should use this scheme. And you should also consider another scheme called the First Home Scheme. The First Home Scheme will give you up to 30% on top of Help to Buy. So if you're buying a 250,000 new build, you can get 40%, so that's 100,000 combined. In return, the scheme takes an equity stake in your property, which you will have to pay back if you ever sell the home. Finally, you may be able to bump up your deposit even further with a gift from your friends or relatives. This is usually your parents. Now, it's unlikely that they have 50 grand or whatever lying around, but they may have equity tied up in the family home that they can access to provide cash for a deposit via a gift. And that process is known as equity release. So your parents could release equity in the home. They could then give that to you as a gift. And that, in combination with the First Home Scheme and with the Help to Buy scheme, triples up the level of deposit and greatly increases your ability to buy and outbid others when you're looking to secure that first home. In a nutshell, here's my 3 insider tips for first-time buyers. First, reduce your outgoings in the 6 months before applying for a mortgage so that you can get the largest loan. Second, boost your deposit as much as you can by using schemes and gifts from family. And third, work with a mortgage broker who has access to all the lenders so that they can get you working with a lender that maximizes your mortgage. If you like this video, please like and share.